Good afternoon. This is Larry Tentarelli with today's edition of Your Daily Five for StockCharts.com. So we'll get started with an introduction. My name is Larry Tentarelli. You can find me on Twitter at LMT978 is my handle. Also, you can find me on my website. It's bluechipdaily.com. We have a 30-day free trial promotion right now. So if you like what you hear in today's video and you'd like to learn more about what I do and my technical process, you can find us on the website. So we've got 5 charts to go through today, and we're going to start with the core chart. So we're going to take a look at the S&P 500 and take a look at the NASDAQ 100, because I think when we get into a general market downtrend like we've had recently, I think it's very important to pay attention to the indices, because a lot of what happens in the general markets carries over to most stocks. So we'll start with the S&P. We've got a nice rally that's going on right now. So the S&P is pending higher for the week, for the second week in the past 10. So it's been down most of the past 10 weeks. Pending higher on the week. So the key levels that I've got on my screen is right now, I do believe that we're in an oversold rally in a primary downtrend. So if we take a look at SPY, we can see it's made obviously a series of lower highs. It's made a series of lower lows. We've got 4 declining moving averages. And really the key factors that I focus in on is price and trend. So the first real resistance point that I see on the chart is 400, 405, and then 415. So we had a pretty sharp move down from 415 to 362. So we're somewhere in the middle of that range right now. If there's some real follow through in the index, then 390 is a first level, but 400 to 415 is where the index would start to get into a real technical test. So if we get up to that level, I want to see how the S&P acts. The declining 50-day moving average has been overhead since April. And I think we're in a primary downtrend right now. What would change my view is if for some reason SPY can start to close over 415, then that would change my trend view to at least neutral. But for right now, what I see on the chart, series of lower highs, series of lower lows, and declining moving averages, until we can start to make some progress in this 400 to 415 range, then I want to stay much more defensive in my positioning. So chart number 2, triple Q, NASDAQ 100. So very similar to SPY. 4 declining moving averages, had a sharp move lower. So the key levels that I'm looking at here, anywhere from 300 to 315. So I would expect if there's some more sharp follow through, and we had a pretty sharp drop, but if there's some more follow through where it really starts to get interesting for triple Q is this 300 to 315 level. So if for some reason, if triple Q can get over 315 and start to close above here, then I would shift my downtrend bias, which it's in a downtrend right now, but I would shift that to much more neutral. So really the key level is if it can get through 315. But for now, I'm much more defensive. I'm positioned with this being a bounce in a longer term downtrend, and then we'll see if it gets to 300, how this range starts to develop. So chart number 3, and this is a very important chart because there's a lot of concern, obviously, in the markets over inflation. I think that's really the biggest focus right now. Every single day when we turn on the news, we hear about CPI, we hear about the Federal Reserve and their interest rate hikes. And really, I think the key market that stands out in everybody's mind right now is crude oil and the price of gasoline at the pump. So they're not 100% correlated, but they are correlated to a degree. And crude oil is a very important market. I was bullish on the energy sector for about 18 months, but I closed out all of my energy positions over the last 2 weeks. So crude oil is on a lot of radar screens right now. There's a lot of predictions out there that this is the top for the crude oil market for this cycle. And that's very possible. We never know. Crude oil's been very strong. Crude oil's been very strong. It's in a very strong uptrend here. It did make a recent high, but the key level for me is $100. So my view is as long as crude oil stays over $100, then I'm going to lean towards this uptrend bias. If for some reason it starts to break below 100 and starts to close below this level, then I would go from an uptrend bias into looking for more possible downside testing. So it's been very volatile. I don't have any positions right now in crude oil or energy, either long or short. So I'm neutral overall. This drawdown is very cautionary, but crude oil can be very, very volatile. We saw it had a sharp drawdown from 130 to 93, 85 to 62. So crude is a very, very volatile market. It's prone to having very sharp drawdowns. But for my time frame, 100 is my key line in the sand. So as long as it stays over 100, then I think the bias stays to the upside. So outside of that, we're going to take a look at two stocks, two sectors. So we're going to start with biotech. And biotech is an interesting potential recovery chart. And the reason that I say potential is I follow a trend following approach. So basically what I look to do is be long in uptrends and either be out or short into downtrends. Now, XBI, it's just a radar screen name for me right now. So I don't try to find the bottom in stocks. I don't try to find the lows, and every so often we'll miss the low. But by not trying to find the lows, I avoid getting caught in a lot of these things. So I'm just paying attention right now to biotech. I don't have it on my buy list as of yet. It's just on a longer term list, but there's a couple things that are constructive here. So biotech, and we've got the daily chart for XBI, which is the S&P Biotech ETF. So the first thing that I want to pay attention to, it had a very sharp drawdown from 97 to 61 and change. So this unwound very quickly. Now there was a lot of very high volume near the recent lows. And one of the things that I look for a potential longer term trend reversal is I like to see a very high volume selling washout, almost a capitulation. And basically what happens is when we see these very high volume trades, this basically shows that anyone that's looking to sell is basically sold into this high volume move. But then we had a higher volume bar here, very high volume reversal bar here. So this is just on watch for right now. When it came down to the recent lows, just over 62, we can see a lot of volumes come in. So I don't try to call bottoms whatsoever, but what I do is I pay close attention for potential longer term trend reversals. And if there's a longer term low or a longer term base that's trying to develop here, this very, very high volume capitulation and then move higher is something that I look for. So this was our members chart of the day yesterday on the website before it started to break out here over the 50-day. It still has some work to do. I'd like to see it start to get over 80 to 82.50, but this is just high right now. I'm not buying it right here. I think that there obviously, if the markets pull back, there could obviously be some downside testing. But key levels for me, I'd want to see it hold over 62 on any type of a pullback. And then I'd want to see it start to close over 82.50. So that is high on my watch list, but nothing as of yet. And then chart number 5, and this chart, it went onto our radar screen a week and a half ago, and it's actually been a very surprising chart. So Federal Express, obviously in industrials, we all know FedEx, they do delivery services, but a few key things here with FedEx on the chart. And once again, this is on a potential trend reversal list, but this is a more constructive chart that's actually breaking out into a stage 2 uptrend. So FedEx was stuck below the 200-day moving average, but we can see on the chart 190 to, we'll call it 195. So 190 to 195 held for about 3 months in a row, just a very brief test below, but 190 to 195 held 1, 2, 3, 4, 5 times, started to work its way higher. I believe they raised their dividend here and they made some changes with their board of directors. But in either case, this was a very, very high volume spike that sent the stock from 200 to 228 in one day. So what this high volume shows me is obviously a lot of institutional buying and institutional positioning. Cleared the 200-day today on a lot of volume. So this was on our weekly focused stocks list coming into the week, testing just below the 200-day. Nice high volume move. So I've got to move this back onto the stage 2 uptrends list, and we'll see if that can continue to hold. So that's it for today's charts. I hope that everybody enjoyed the video, and I hope that you have a great weekend. Thank you.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.